for insights and some stats on the markets. Let's bring in Ryan Detrick. He's chief market strategist at Carson Group. He sees gains of between 12 and 15% ahead this year for the S&P 500. And let me just start here, Ryan. You don't seem to much care, or do you, where the 10-year is relative to this forecast you have for the stock market?
Well, first off, good morning. Thanks, everyone. Stay safe out there. Steve, you said earlier you're going to sing. I'm having fun listening to you guys this morning, so this is good. Listen, our take on the 10-year is you look around the globe, what are we seeing? I know everyone knows this. Copper's higher, right? Industrial metals higher. We think the global economy is a little bit better footing. Maybe we don't quite see as many rate cuts this year as the market's pricing in. So that's kind of our base case there. But I'll just talk big picture just this week. Down 2% on Tuesday. Everybody freaks out, right? Rightfully so, potentially. And what happens? Then we rally. But if you look at high yield, we talk about the bond market and credit markets, high yield was barely down on Tuesday. And to us, that was a clue that, listen, you can have bad days. Every year is going to have them. But that was a little clue that things are maybe better under the surface. And just like yesterday, high yield relative to treasuries broke out to a multi-year high. We're hitting new highs in advanced decline lines, meaning it's a broadening out market. We can get into that. The reality, we've been saying it's a bull market for over 3 years now. It wasn't so popular 3 years ago. We still see reasons to think we're going to have a better than average year when all is said and done this year.
Ryan, I'm going to back you up on that. Obviously, some of the growth forecasts have gotten better. Fourth quarter was going to be weaker. Now it looks like it's going to be stronger. And then you have in the first quarter, the stimulus coming through perhaps from those bigger refunds. And one answer to Brian's question that I left out was stronger economic growth is one reason for it, as well as the massive draw on capital from all the AI investment, which tends to lift yields if there's all this investment going on. But walk us through your outlook on the stock market. People go to bed at night concerned that they're heavily invested in an overvalued market. Should they be losing sleep, Ryan?
I don't think I should lose sleep over that. 2 years ago, we could have had this conversation and people would have said the market's overvalued. We get it. It's growth, technology. That's clearly where it's overvalued. You guys talk about Intel up 40% on the year. Yes, it's down double digits right now. But again, I think it's just kind of snapping back a little bit. We've called this the dual tailwinds to a bull market, earnings and profit margins. Both of those continue to go higher. And one more thing on this is neat, I think. Productivity. I know you guys talked about it when it came out recently, 4.9% in the third quarter. Go back and look at history. Yeah, when you have an economy that's low hire but low fire, where we are now, we think that's probably going to continue. You can have higher productivity. When you have higher productivity, you tend to have higher earnings growth. You tend to pay a little higher wages, and it puts a cap on inflation. We saw that in 23 and 24. Productivity was down last year for the most part. But if productivity comes back, Steve, we think that's kind of that magic elixir that's going to keep this economy surprising to the upside. And as a result,
I think you're wrong, Brian. I think your tense is wrong. Not productivity. If it comes back, it is back. You said 4.9.
When?
Our producers in the back put up the chart with the 4.9 on it because they're right on it. But two things out there now, Ryan. One, a lot of talk about small cap and a lot of talk about international. Where do you stand on those two categories?
Absolutely. So we are even weight developed international in the money we run, which is actually a lot of RAs our size probably aren't. So we like Europe specifically. With small caps, we have a slight underweight. But I think what the crazy stat I just heard, 14 days in a row, the Russell 2 has outperformed the S&P 500. That's the longest in decades, right? Now we've seen these fits and starts. Yeah, 96. We've seen these fits and starts before with small versus large. And back to maybe my first answer, we don't think we're going to cut quite as much. I know the economy's solid, so small should do just fine. But we think having a well-diversified portfolio, still being overweight equities, I know it's kind of boring and cliche to say, but that is still where we are. And to have, just a little bit of everything, you don't have to pick, one thing or two things. You can have a diversified portfolio. And a lot of it, just again, yesterday, transport's hitting all-time highs. I mean, regional banks breaking out to multi-year highs. There's a lot of positives still out there. It's not just about 7 stocks. We don't think it ever was, and to benefit from that.
Ryan, it's a real pleasure to talk to you this morning, and I'm seeing the same thing that you're seeing in the futures market, which is only about 40 basis points of cuts built in for the rest of the year. And we have a chair coming in who will be nominated by President Trump, and still the market has just the 40 basis points built in.